Last week's precious metal crash was blamed on one thing: the nomination of Kevin Warsh as the next Federal Reserve Chair. The media framed it as hawkish. The market accepted that framing. Rates up, liquidity down, metals sold. But several respected market veterans believe the entire narrative is wrong. They believe Kevin Warsh is not a hawk. They believe the market misread the signal, and they believe what comes next is not priced in. If policy expectations are wrong, then price reactions based on those expectations are wrong too. And when that realization hits, markets do not adjust slowly. They reprice violently. Peter Schiff believes the crash itself was built on a false assumption. He argues the market assumed Kevin Warsh would act as a counterweight to President Trump, a sound money hawk who would restrain easy policy. Schiff says that assumption is wrong. He believes Warsh and Trump are aligned, that easing is the real objective, and that the market sold metals on a misunderstanding.
But they try to spin it as if nominating Kevin Warsh means that Trump has now done something that was unexpected. And that's because they're now positioning Warsh as this major inflation hawk who doesn't like quantitative easing and who, doesn't like low interest rates, saying he's one of the few FOMC members when he was there before, around 2008 timeframe, who was arguing for higher rates and was a critic of quantitative easing, right? That he's a real independent guy, hard money guy, Austrian economist, almost like they nominated me, saying, right? And so that helped fuel the sell-off in gold and silver. And I think whoever it was that started the selling on Thursday had the inside information that that was probably going to happen. And it was all part of the plan to first hit gold and silver on Thursday, and then, that like a 1-2 punch, get the technicals like a reversal of one day, and then come out with this supposed surprise game changer to say, hey, everything you were worried about, right? People were worried about a loss of Fed independence. They were worried about, a Fed that's going to be slashing rates and doing QE. And in one, swoop, they diffuse that bomb and say, oh, look, Trump did something completely unexpected. So all the people who were buying gold and silver because they expected easy money, right? Rate cuts, lots of money printing, inflation, you're all wrong, because look who Trump picked to be the Fed chairman. He picked Kevin Warsh, right? He's an ultra hawk. And I think it's all a bunch of BS. I don't think that Trump would have appointed Kevin Warsh if he thought that's what he was going to do. And he told everybody that he wants to put somebody at the Fed who's going to cut rates. Now, the gold and silver market believed that, which is why gold and silver hit record highs. But now we're expected to believe that that's not the case, that Trump has had a change of heart, that he no longer wants a Fed chairman who is going to cut rates. He wants one who's going to raise rates. And, Powell is not raising rates, so let's get rid of him and put somebody in there who's going to hike interest rates. There is no way that that is the case. Maybe what they're trying to do is create the false impression that they've put a hard money inflation hawk at the Fed so that when he does cut rates, people will think, well, I believe that Kevin Warsh has his marching orders and he is going to do exactly what Donald Trump wants him to do, because if that wasn't the case, he would not have been picked for the job. So forget about what they're portraying to the public about how he's independent and how he's a hawk. If that were the case, somebody else would have got the job. But it makes sense to me that they want to position himself that way, because it was clear in the precious metals market that the way he had previously positioned it was a problem.
That alone challenges the dominant narrative. But Schiff is not the only one saying this. Clive Thompson looks at Kevin Warsh's track record. He argues Warsh has a history of aligning with whoever is in power, not opposing them. According to Thompson, Warsh will not fight a declining interest rate environment. He will support it. That means the idea of Warsh as a hawkish counterbalance may be completely backwards.
His name is Kevin Warsh. He was a former governor, and he has been seen as a sound money person because of the fact in 2011 he resigned from the Federal Reserve. Why? Because he didn't agree with the quantitative easing, QE2 it was known as at the time, and he felt that this would be inflationary. So you can see based on that, a lot of people see him as a hard money man. But I think you're going to find out a lot more this weekend and on Monday, because looking at some of the things he's said since, my conclusion, and I won't go into too many details here, but my conclusion is that he's a person who tends to follow whoever is in power at the time, and he has made some statements, which you can read about if you Google it, but they make me think that he's not at all going to be hawkish, but rather could well be very dovish and support lowering of interest rates, something which even President Trump has said he expects that he will be lowering rates. Trump says he agrees with him that rates should go lower. But that's not how the market saw it on Friday, because they didn't know that. They perhaps hadn't got time to read up on him. But I think you're going to find out that that view that they're employing somebody who is going to defend the Federal Reserve, as was seen back in 2011, defend the independence of the Federal Reserve, perhaps it's not all that it seemed at first sight. That's just my opinion. We'll see what the papers and TV channels make of it over the weekend.
At this point, the pattern starts to emerge. Mario Innecco takes the argument further. He says the media is attempting to paint Kevin Warsh as a modern Paul Volcker, a champion of sound money and tight policy. Innecco does not believe that characterization. He suggests Warsh could instead enable financial engineering, including a revaluation of gold on the Treasury's balance sheet. That would inject liquidity, support spending, and ease conditions, not tighten them.
People are talking about Warsh. I don't know if you want to go into him now, that he's going to be like Paul Volcker. And I think that's complete baloney. I've heard people say that, he's going to help Main Street, not Wall Street. But I don't see how he can do both. I mean, there is one thing that he could do to help Main Street, and that would only be like a sugar rush, temporary sugar rush. And that would be to revalue the statutory price of gold, like from 42.22 to around where we're now. And I've calculated that the Treasury would get a $1.2 trillion windfall. They could use that to buy back some of the I think 4 trillion or so that the Fed owns of treasuries. They could do that, and then send some of it as well. Send a check to the people at the bottom who are suffering, and then they might, do well in November this year, the election. But yeah, if you look at what he said, he thinks rates should be down to around 2 or 3 or 4%, 2 or 3. So he sees room for rate cuts. So I'm not sure how he wants to do quantitative tightening. But why would Trump bring in someone that's really hawkish?
So step back and look at what just happened. Metals sold off on the assumption of tight money, on the assumption of restraint, on the assumption of a hawkish Fed. But if Kevin Warsh turns out to be a dove, clearly and openly, then last week's crash wasn't confirmation. It was mispricing. Easy money doesn't just lift gold and silver. It fuels infrastructure. It fuels industrial demand. It fuels real asset scarcity. That's silver, gold, and copper. And when the market finally realizes that this policy path was misread, prices won't move gradually. They will reprice, because this outcome is not priced into the market yet.